Good morning, traders. It is Monday, the 25th of August, 2014. It's 8:01 a.m. Chicago time. Derivatives trading involves substantial risk of loss. It is not suitable for all investors. My personal opinions, market data, and recommendations are subject to change without notice. Past performance is not indicative of future results. Looking at what we have overnight to talk about, it really isn't all that much. The U.S. dollar, the euro-U.S. dollar pair slumps to an 11-month low uh, uh, as markets bet on policies that are going to be divergent between the Fed and the ECB. This widens the U.S. The U.S. 10-year note versus the Bund to levels not seen since 1999. 1999. U.S. stock futures sit at all-time highs ahead of the U.S. Open as markets price in the increasing likelihood of ECB asset purchases. Today's a UK banking holiday. Volumes are muted, and most of today's attention is towards the U.S. numbers. There's not much else to report. Pretty quiet weekend. The thing that is noted from last week is the Jackson Hole commentary. Divergent central bank views out of Jackson Hole favors further bullish U.S. dollar trend. Fed Chair Yellen language seen moving towards neutral. ECBC moving closer to QE after Draghi acknowledged the weakened inflation outlook. Participants believe that the ECB will purchase assets. Bank of Japan's Kuroda conceded that if it might have to pursue its aggressive monetary policy easing for a longer period of time. French president dissolved his government following internal feud over growth and austerity position. This will be the second cabinet reshuffle in France in 4 months. German IFO registers its fourth consecutive decline as growth trend suffers from Russian sanctions. So last week we said that based on the German numbers, it didn't seem like the Ukraine situation was affecting Germany that much, and that isn't so anymore. And looking at today's numbers, at 8:45 Central, we have market PMI services expecting 59.1. At 9 o'clock Central, we have new home sales for July expecting 425. And then at 9:30 Central, we have Dallas Fed manufacturing activity for August at 13.0. Of course, as in every week, we have the 1030 3-month bill and 6-month bill auctions, 29 and 24 billion respectively, expecting 4.7 and 4.83 bid to cover on that one. Or actually, that was the prior bid to cover on those two auctions. Let's look at the technical picture here. Interesting week last week, definitely a roaring bull trend. So Friday, we had actually what we had expected for Wednesday, which was a choppy sideways market with complete indecision, resting a little bit, pulling back. It broke Thursday's low and put in a lower point of control, even though it was in range, lower value. Friday was basically a day where participants were just not looking to push any higher. It's interesting because Friday set up very nicely for a potential break of 91.25 and going neutral, potentially closing neutral extreme, but it never did that. It left a weak high with a double top at the IB high at 91.25, and it finished in the middle, lows in the middle. So let's look at what Friday did from the start. So here we go. So this is where we finished Thursday. New highs on Thursday to 92. A nice a normal variation day and a nice continuation of the trend here. Tested Wednesday's close and continue to go higher. Very methodical auction. Friday opens in range in value right here at 87.50. Tests the point of control immediately. So you see this test of 89 right from the get-go. This pink line is the point of control, 89 even. And then so that puts in the opening swing high, and then starts to make a run for the value low area, and then finally it finds some support here at 84.25. Comes all the way back into the open. Not sure why my opening swing is missing here. Swing low. And opening swing high. Okay, so it gets back into the opening swing, pretty wide opening swing, and then finally breaks the opening swing high, closes Thursday's gap, closing gap, and then the expectation was for a test of 92 for a continuation higher. So it puts in a high at 91.25. Now it's 9:30 here, and the initial balance is in. Test the initial balance again. The expectation here is for a pullback and a break of the 91.25. That's a pretty decent probability setup, but it just could not do it. It ended up breaking the OS low again and going lower, extending the initial balance lower. Very, very odd trading. Puts in a higher low at 82.25, comes back to the mid, fiddles around with the mid. This is another nice setup here, the way it's put together, but still, yet again, it does not work, and it ends up just kind of playing around, putting in a double top at 90. And falls right off. So it works itself all the way back up to 90, but could not take out the 91.25. There's just no participation here. Most of the volume occurred early on. 89.75 lower high on the double top here at 90, and then the market just closes with buyers coming in on the close. So weak high, really decent, pretty decent low here. Expectation is for the 91.25 to be taken, 92 to be taken out, and it just ran out of time, could not do it, and that's didn't. But guess what? It did it on the overnight last night. Most of you who've traded the overnight know that the CME opened late yesterday. It was supposed to be at 5 Central, 6 Eastern, and it did not do so until about 9 Central, 10 Eastern. There were some serious technical issues that caused the open to be pushed way, way back to 9 o'clock. So from the time it opened, it was aggressively bought and has not moved off those highs really much. It pulled back to the mid, and we have a weak high on the overnight, and we're pushing up against that high. So I expect the open to show us a new high on the overnight. I do expect some responsive selling, but we have in these 2 days. In these 2 days here, we have a decent amount of volume to fuel the next leg up. Recall that 2000.5 is the next measured move target, and then beyond that is 2001. Let's see, 2001.25 right here, 2000.5. This very crowded area. 2000.5, 2001.25, some confluence there. So expecting a test of 2000 at some point today. It's only about 3.5 points away. It's a major figure, and so the expectation is that we'll see a test of that. Again, really strong buying on the close. So overall, what Thursday did is it ended the one-time framing up a rest day, odd-shaped profile, very strange how the volume was concentrated at value low, lower high, lower low, lower value, lower point of control, and then but left a weak high at the double IB high, and it's been broken overnight. There's not much more I can tell you here on this on the way this is configured, other than the fact that August has been a very interesting month. It's got the structure left behind by August. It reminds me of what happened over February. I think it was February, January of 2000. A very strong market with weak structures below, and we know how that ended. I'm not saying that I'm bearish or anything, but I am saying that this is not a normal auction. This is not the normal way the market makes highs. This is driven by something very strong, something external. We'll see how it goes once we get to 2000. I'm going to watch the open today, expecting the market to very quickly take out the overnight high, and I'm expecting some responsive selling, responsive being towards the prior day's value, but I don't expect it to be very strong. We'll see how that goes. I don't have much more for you. Headline risk, it's the normal stuff. There's news has been very, very muted over the weekend. That's a good thing. Fewer people dying, I guess. Most of you have heard of the earthquake in California and the trouble that's caused, but there's not much else on deck. Just remember, we have congressional elections here in a couple months. There's a lot of rhetoric and a lot of talk of about taxes and about the markets and so on and so forth, and that's going to come into play more and more as we head into November. But overall, pretty quiet day. I don't expect too much to happen today. I think it's likely to continue to be a quiet morning. I'm going to, because we're opening out of range, I'm going to see what kind of reaction we get at the overnight high, and if the responsive sellers have any strength. If they don't, if the responsive sellers bring the market down to say 94, 75, 95, and they just diddle around and there's just nothing being hit on the bid, then I'm going to look to go long into 2000, 2000.5, if not 2001 and a quarter, and that'll be the big trade of the day. Trend is up. Short-term trend went neutral on Friday, but intermediate and long-term, the trend is firmly bullish. So I'll stick with that storyline until it changes. Good luck today. I'll be on Day Trading Radio at 10 a.m. Central, 11 Eastern, to provide the weekly update on where we were and where we're likely to go for the week. Maybe I'll catch you there. I'll be sure that it's commercial free. Take care.